Hey traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I hope everybody's having a great trading session. And the equity market's about ready to open. In just normal fashion, we're seeing equity markets bounce a little bit, which is expected. It's like you guys know every day the equity markets they tend to buy them up, and I'm sure we'll see a spike into the open, and this is just what happens. But as you guys know, especially if you were listening in on the F.A.C.E webinar, the Aussie dollar and a lot of these currencies actually hit some pretty key levels. So let's talk about all the developments that have happened overnight and, obviously get the key levels down. So first and foremost, you guys know I'm looking for the Aussie to pivot somewhere around here, around the 78 cent level. So 78.10 remains resistance. And now that we've hit it and we've rejected it, I'm putting an asterisk next to it. So from here, really important support is going to be these lows right there. Okay. And that comes in at 77, basically 77.10, right? Because if you're long, you're long right now and you watched it reject that 618, you're like, okay, I just don't want it to get back below this little double bottom here. Okay, so that comes in at 77.07. I'm just going to write down 77.10. That should be pretty important support. We're going to stay range bound. Let's go over to the Aussie dollar, or the Aussie dollar, the euro dollar. So the euro, when we cleared this 120 level, I was looking for a move up to 121. We didn't quite make it to 121 overnight. We made it to 120.80. Close works in short horseshoes, hand grenades, and apparently markets. So close counts, right? I still think that it's possible that we tag, this resistance here. I still think it's possible, especially, you take a day like today where stocks are opening a little weaker, they get a nice little boost higher. We challenge the 121 level. I think it's still doable. So let's not write off the euro just yet. But support right now is 119.90. That is going to be key support for the bulls to hold, right? They don't want to see us drop back below this level right here. That top of that, which was resistance zone, is now the top of the support zone. Steph says, Balak, hey, can you tell us what the DSI was in copper and lumber yesterday? Oh, man, I was going to try to do an accent for you.
She actually said Balaki.
She said Balak, hey. Substitute teacher, baby.
Yeah, I know.
All right. And I was going to say, Stephanie, you can't really do Stephanie in slang. I don't think it works.
No.
Step Haney. Step Haney. Maybe that works. All right. I'm sorry. I'm just no more joking around. Let's you want to go to war, Balak? Hey, let me pull up the DSI. Is this the DSI from last night? Did I not post it last night? What is today? 16th? Oh shoot. Did I get it yesterday? I was I did. Okay, here we go. My bad. Grab it real quick. Just give me a second. Here it is. So the DSI and volatility was 14, right? You asked about copper and lumber. Copper is at 61. Lumber was at 95 again. That's ripe for reversal. These lumber prices are out of control. And Equities over here in the 80s. So yeah, that's it. So there you go. Hopefully that helps Step Haney. All right. So and sorry about that. I think I got tied up yesterday evening. I was dealing with some family matters yesterday, so that was it. Okay, let's get back to the bias chart. So cable. So support is 139, resistance, and that's the breakout point. Remember, resistance yesterday was 140, and we are struggling at 140. I know it's the 127% extension, but you can see all this horizontal resistance right here too. So I'm going to write down 140.10 is pretty key, and the cable is under some pressure today. So I'm a little concerned with how the cable's acting. I don't think there's any bias here as far as being bullish or bearish. Well, actually, I take that back. We had a double bottom, and I guess we should keep it on bullish unless we break back below 139. So let's do that because we do have that double bottom. I forgot about that momentarily as I was talking. Kiwi. So the Kiwi stopped at, actually it didn't stop. It's at 72 cents right now, which was resistance yesterday. We overshot it at 72.28. So I'll write down 72.30 as resistance. You know what? I have to write down 72.60 because that's the 618. It's horizontal resistance all the way across the board. So that's going to be 72.60. I think if it could get up there, that's a really good place to be on the short side. It's a 618, so I'm going to put the asterisk. We are range bound. Support right now will be all the way back down at 71 cents. That's it. Same. Nothing's really changed. Okay. Dollar CAD. So the dollar CAD is still holding up, holding 124.75 support. Resistance is at 126. It's very choppy in here, but I have to admit it's holding up pretty darn well. That's the fact of the matter. It's still range bound. 124.75 is support. 126 is resistance. I think it's the same numbers that we had as yesterday. Dollar Swiss. So the dollar Swiss, you could argue that it's bear flagging, right? But if you look at the daily chart, the 200-day moving average still comes in right here, basically 91 cents. Resistance is going to be any rally back towards 92 cents. So I don't think there's much to do here. I mean, we happen to be in the middle of this 91 to 92 cent range. But I do think while it's below 92 cents, you have to put it as bearish. Right? I mean, this rally to new highs and reversal, we're now below that support. So you got to kind of keep it on the bearish outlook for now. US dollar, Norwegian krona. So this is kind of the risk of the US dollar, Norwegian krona is if we get back above 835, that is a false breakdown. I picked up some this morning below 830, just as we were starting our webinar and Dale was talking. I am going to try to play it as a false breakdown, but I'm not getting too aggressive down here. I just picked up some just to kind of keep it as a tracker. But I think above 835, and you've got to be, thinking of it as a false breakdown. So I'm going to write 835. Now, while we're below 835, it's bearish. So don't think it's not. It is. Support is going to be 820. Why is it 820? Because that's 161% extension right here of this last move. But I wonder if you take this low to that high. No, we didn't. didn't quite reach for the 100. It's also the 127% extension of that move. So again, this could be a false breakdown, but we have to get back above 835 for me to even believe that. Okay. Okay. Dollar MEX. Now, we had a nice reversal off of the wedge low. This is a descending wedge, but it does not turn bullish until we're above 2001. I'm going to tell you guys right now, this is my next pattern in play if we break out to the upside. I'm just letting you guys know. So 2001, 1980, 78. Let's put down 78. This is key. It's bearish while we're below that, but it you know, is if we break 20, let's 2001, 2002, if we break it, it turns instantly bullish. Just recognize that. Okay. Continuing on. Dollar yen. I'm surprised the dollar yen is higher right now. So let's take a look at yields really quick. And, you know, I mean, I guess because yields bounce back, I guess that's what took the dollar yen back up. And all I have to say is I'm thankful I'm not trading the dollar yen. It just bums me out because the Canadian yen bounced back too. But resistance here, I mean, we're back above the 108.35. Resistance is going to be probably these lows at 108.60. Support is 108. So I really just think this is range bound currently. So, you know, 108 to 108.60. I don't think there's a whole lot to do with the dollar yen. Okay, let's talk about the dollar index. So the dollar index is, this is the 618 retracement. If you guys think the dollar is going to bounce, you have to play the dollar on the long side while it's above the 618. So in other words, the risk reward at this point is to be on the long side. You know, there's your stop and maybe targeting somewhere back up here or even higher. I mean, you know, I think it's a good risk reward here. Don't forget, if you're looking at the dollar, this is like the last, well, this is the full year, right? Don't forget that we are making higher lows or higher lows and higher highs all year long, longer term or on a daily chart, right? So when we've had a pullback to the 618 retracement, you got to be respectful of that. So the 90.80 level, 90.81, that's important to trade or important support in my opinion, because it's a 618 retracement. And if you want to be on the long side, this is probably the time to do it. I'm going to keep us range bound, but resistance will be back here at this trend line resistance, but also 91.50. Okay. Okay, let's go into now you guys may have noticed I closed out my gold today. I'm worried about it because intraday we couldn't even get a lift above this resistance here at the 1775 level. And with the dollar showing a possible reversal here at the 618, I didn't want to be long gold, because if risk assets come down, gold might come down too. So especially if the dollar starts to rally. So I'm going to be a little careful with gold, and especially if we break back below this 1760. Okay. I've already taken mine off, but I'm just telling you guys that you have to be a little careful with gold. It is still bullish while we're above 1760. So if you want to be long gold, you know, let it dip down here and then get long, because that's going to be your best risk reward. But it is struggling and the dollar is recovering. So just think about that. Resistance in gold, I'll write down 1790, which was yesterday's highs. Silver, I guess we can write down the same thing as yesterday. This is a 38% retracement. Is that this 2626? Support is a 618 retracement down here. It's also horizontal support at 2471. So we'll write 2470 as support. 2626 is resistance, and it is in a range. Bitcoin, same as yesterday. 60,000 is resistance. And while you're below 60,000, I think the risk is lower, but support is at 50,500. And you notice we're not bullish anymore. We're back in a range, because we are outside of channel support. This channel has been, you know, basically in existence all year long. All right, last but not least, the S&P. So oh, stocks are open. Oh, I forgot. I have the wrong thing open. You missed the ding, ding, ding.
Yeah, what was it?
I don't have one of my trading platforms open. That's why it always dings. That's my fault. I was like, where'd the ding go? That's what I was thinking. I'm like, oh, I forgot to launch it today. I think I don't know why. I don't know why I forgot to, because I got open positions there. Oops. Okay, S&P. We're below channel support. Resistance on rallies back at 41. Because that's the underside of the trend line, right? Also a descending trend line here. That's going to be around 4170. Okay. Support right now, I know we had written down this 4110 a lot last week. And I'm going to write it again, because I think if we break below this 4110, what's happening here is that we will then for sure be carving out some lower lows, which suggests that the market's probably a little toppy here. All right. I'm going to keep us in bullish for today, because remember, we haven't, the market just opened. I'm not convinced that this market is ready to roll over just yet. I'm going to need some convincing. It looks like we're going to pause here, but fool me once. All right. So 4110. And I'm going to keep it in bullish while we're above this support. We start getting below that 4110 level, and then, you know, we start carving out some lower lows and lower highs, and that means we're probably going to be range bound for a while. All right, guys. Well, here's your bias chart. It is finished. Good morning, Steve, Stelios. How you guys doing?
Hello. I've
Hello.
uploaded it already, so or
What's that?
it's uploading now. So
Oh, great. Thank you very much.
yep.
So Stelios, what are your thoughts here?
Like we said on Face, we have a second day of equities going lower. I'm not convinced yet because the dollar is not bouncing. So I'm waiting for that. And I have this feeling, we were talking about this earlier, right? Me and you. I have this feeling that we're getting close to the point where we're going to have some kind of event that's going to push risk lower. What is that? I don't know. But I'm just, you listen to all these things like SPACs. They used to be flying and the record amounts of issuance. Now everything's dropping. And also cryptos, they are now big enough to matter, right? So when cryptos start going lower, then they're going to take some other markets with them. And you know how it is, it's like a chain reaction, and yields have gone higher, obviously not convincingly higher yet, but they've gone higher. So if they keep creeping higher, then eventually the market's going to have to take notice. So it's all of these little things that are starting to brew. Having said that, it's very difficult to time this. So I'm not going short anything, but I have reduced my equity exposure to 0 now. So I'm just waiting now.
That would be very low exposure.
Yeah, I guess. So I know. I mean, it's a feeling I have. I've had these feelings before. They've been right and wrong. Obviously, I'm not. I can't say I'm going to be right for sure, but it just feels that a lot of things are happening. There's so many currency pairs which are. They look like they're breaking out or close to breaking out. So we could have, false breakouts, and the dollar. If the dollar get some traction, and I think we could have a little bit of a chain reaction, and you never know where it's going to lead.
Yeah, I don't know if you caught my analysis earlier on the euro yen. I think that's a big risk right now because so many people were short. They got squeezed, and then here we got slammed back down, and this is a risk barometer. So if you start to see the euro yen really start to roll over, I think that's a risk for the markets. But
yeah, and Dimitri says it's in an ascending wedge, but it's above the 13-year trend line. Yes, it's marginally breaking out. So I'm short euro yen from 130, and my stop is at 132. If that comes back below the trend line, then look out.
Yeah, and let's not forget that you could argue, oh, it's above the trend line. Yeah, it's been above and below that trend line really on so many different occasions over the last 2 weeks. And so that's notable that it's not been able to follow through to the upside at all. So anyway, hey, is Steve, are you here?
Absolutely.
All right. Hey, I'm going to pass it over to you. I've got to get ready. I have to visit my mechanic here very shortly. I forgot that it was one of those things. I'm for those of you that don't know, I'm actually going to, for the very first time in a year and a half, I'm going to leave the state of Arizona where I'm at. And we're driving over to my friend's house in San Diego on the beach for the weekend. And I need to make sure the oil is, freshened up and the car is checked and all that stuff. And I forgot I scheduled my appointment this morning. And it's one of those, like, he's like, oh, I'll have it done for you in 45 minutes. You want to just wait? And it's like, okay, yes, instead of leaving my car there the whole day, it makes sense. So I got to do that. So I'm going to turn it over to you guys. You guys didn't need to know all that information, but now you know.
We now know.
You now know. Exactly. So I'm going to pass it over to you guys. And guys and gals, I'll see you guys in the chat room there. And then I will obviously be here for the daily roundup. So I'll see you there.
Thank you, mate.
Blake.
Thanks, guys.
Yep. Okay. I don't know what you want to have a look at. Actually, I didn't mention on Face, worth noting that we did get some UK data today. Average earnings still well above 4% year on year. And unemployment rate dropped to below 5%. And I was reading this article earlier today where there was, I have to find it and post it. There was this guy who was saying, look, remember what everybody was saying about Brexit and it's going to be the end of the UK and oh my God, everything's going to collapse. Well, yes, there have been some issues with with trade, and we've seen the pictures of the lorries being in miles of queues at Calais or Dover, both sides. But things are moving, right? Things are working. It's obviously not as hassle-free as it used to be, and there's certainly a lot of extra surcharges on products. I know, because I've ordered some stuff from the UK and I got asked to pay extra tax for it. But it's not the earth ending disaster that many people said. So it's
Of course
interesting
it
to see
isn't.
the UK clearly not not performing extreme, not flying, or the economy is not firing on all cylinders, but it's not collapsing either. It's okay.
Which economy is firing on all cylinders nowadays?
None. Yeah, you're right. So it's
Yeah.
kind of in line with Europe, in line with the US. Broadly speaking, there's no massive underperformance. So there's certainly good news for the UK. That is.
Yeah, for the time being, yeah, as you said, nothing groundbreaking. There will be costs, but on the other hand, somebody can also say that, they will have the ability to also make some things different, perhaps more efficiently in comparison to
make their own decisions on things.
Yeah, good or bad, at least, it's their decisions. And, the UK is a big country with a decent sized economy, with, experience in politics. I mean, they can make it for sure. Speaking of the UK, the cable yesterday, in essence, confirmed the breakout, since we had quite a strong day higher, and we closed almost at the highs of the day. So technically speaking, I see no real reason why somebody would want to fade this here, not as long as we trade above this channel. So that is that. We can make a lot of assumptions about what ifs. What if this was a genuine rejection yesterday, but just by objectively looking at the daily chart, other than the obvious fact that somebody can say this is just like a blip, I'll tell you that yesterday we closed leaving behind a pin bar, and so far today we have another pin bar, both of them in decision candles. So far nothing groundbreaking has happened to indicate that, major reversal, big turn lower in the markets, so on and so forth. So, instead of wasting my time in making assumptions what's going to happen if we turn lower from here, there's always a chance that you will turn lower at any given day. It's not just a day. Obviously, these chances are low probabilities when you are clearly in an uptrend, or the opposite, if you're a downtrend, reversing higher. I'll just say here that we seem to have stalled in this ascending wedge, and if we get something bigger than that, that can be significant. We've also stalled at the 61.8 in the DXY. So so far the bulls are holding the line in the sand, because technically speaking, more or less that's where the line in the sand is. So as long as that's the case, somebody can make an argument that, at least from a risk reward perspective, turning the other side of the market, wanting to be long the dollar or short the indices here, it makes sense, because you're risking very little to be short against the lows in the dollar or against the highs that we had a couple of days ago in the S&P, for example, to make a decent amount more money than what you're risking to lose. Personally, I'm not going to be taking that trade. I'm going to wait to see more price action. Now, let me pull up some of the metals and crude. So, to start from crude, I said the other day that crude has probably broken out, but there was still one live scenario about the bearish case, and that scenario would be moving lower from this channel for another leg, right? So these are the two scenarios, and they remain the two scenarios. So if crude wants to move lower from here, that would also bode well with a possible risk-off reversal, which, as I said, it remains not the main case scenario, right, but the alternative scenario. Then we don't want to see crude higher from here. You can technically see the why. Now, also from a risk-reward perspective, somebody can make the case that being short here makes sense, and it does. Okay, as I said, not enough evidence for my taste, but from a risk-reward perspective, yes, you can be short here. Gold and silver seem to be more or less undecided. So far today, we have the third consecutive, so far, of course, it's early in the day, pin bar. And in both cases, we stalled at the 38.2% fib of the last move lower. So keep that in mind. So this can go either way. Keep though in mind, and I just wanted to stress this out, that if we see some risk of environment, it isn't unlikely to see especially gold moving higher, or at least not moving lower despite dollar strengthening. Despite the dollar strengthening. So keep that in mind, right? If we do see some risk off, that doesn't necessarily mean that the fact that the dollar is going to be strengthening, that metals are going to be moving to the downside. Especially gold might hold up quite nicely now. That is less the case with silver. Silver is more prone to react to risk on, risk off as a risk asset sometimes, right? Oppositely from gold. So in that case, I would expect that gold might probably be doing better than silver. Now, another instrument that isn't confirming risk off at the moment, at least, is copper, right? Because copper has broken out from this symmetrical triangle, and so far, as you see, not only it's holding up quite nicely, but yesterday that we had, let's call it a little bit of a risk off, although I think it's exaggerated. In the equity markets, copper still had a positive day, and so far today, it's also in positive territory, right? So copper not confirming, a turn lower in risk appetite as well. Let me see what else. Now, USD NOK, which of course I'm keeping a good eye on. Satisfied the minimum expectations of one more low below the triangle. Having said that, I do think that probably it needs to move further. Specifically, I would probably look for an extension, equal to the maximum width of this triangle, which would point towards 8, which is also horizontal support area and a nice round number, right? So theoretically speaking, USD NOK has satisfied the minimum expectations, but I think that we still have downside targets that are very likely to be fulfilled. More specifically, the 88.6% fib at 815, and following that, as I showed you, the measured target at 8. Now, okay. We have questions about platinum. Platinum, nothing has changed yet.
Have a look at Europound as well when you get a chance, please.
Yeah, absolutely.
Yeah. And
so
also,
platinum,
we have about 7 or 8 minutes, and then we have to go, right? Remember.
True.
Yeah.
So okay. Platinum, still two scenarios here, exactly like crude, somebody can say. One, that we're consolidating this leg lower and we might have one more leg to go. Second one, that we've broken through this channel and we're headed higher. This is not resolved yet. I have to tell you though that the more it takes, and the pair isn't breaking out, the higher the likelihood that we have one more leg left to the downside. Palladium, as you see, remains very well bid. Yesterday, actually, made it to new highs, just below the all-time high at 28.79. Today it had a negative day so far, but as you see, it has already pared back most of its losses. So I really don't find any reason why you should be fading this. And the other question that had to do with nickel, as you see, has had a rather impulsive move lower. We've seen a rebound since. We satisfied the rectangle once we broke higher. Now we're trading rather heavily once again. So I would be very hesitant in being long yet. Nickel, I think there is a good chance that there is more downside before the uptrend can resume. Now, having to do with natural gas, not an easy chart to read. Going back to the basics, as long as we trade above this channel, the bullish argument is stronger. And we have broken out through this little double bottom there, which points towards like 288, right? So, probably we're headed towards 288, but I can't really say that so far this move is inspiring and, is sending signals that we've already found the bottom. So we might be in a more complex corrective move. I would, for the time being, find other destinations for my capital instead of trying to invest in being long natural gas. I think it's going to be going higher eventually, but not sure we've already started that move. AA. Is it Alcoa?
It is Alcoa, yeah. Sorry, I was off for a couple of minutes. Did you look at Euro Sterling or not yet?
Oh no, I will.
Okay, after this then. Okay, thanks.
Yeah. Alcoa, some type of an expanding triangle here. I think we might have more to go. Look at the RSI diverging since November, by the way, as well, right? So I would be very, very careful here. I think we, and today it seems to be working on an evening star formation for the time being. Look at this. So be very, very careful. Okay. I think short term, the downside looks more appealing before we can eventually, resume the upside. Now, having to do with euro pound, Stelio, that you asked for, here it is. So euro pound.
It was actually one of our friends here who asked for it, but
okay, euro pound, a nice breakout from this channel. Found resistance once again in this horizontal support resistance area. Logic would indicate that as long as we're trading above this channel, we should see at least one more leg higher towards this nice confluence of resistances at 88.30, 88.50, that area there. Okay, so I think we should see another leg to the upside towards that resistance before we can potentially resume the downtrend. But also don't forget that the bigger picture indicates that key area for the trend is 80 to 80, right? So we might see more downside following that, but as long as we trade above 80 to 80, in the long-term viewpoint, we're still trading in a large range, right? So there is no long-term trend at the moment, only short and medium-term trends. Okay, today we'll have to wrap it a little bit earlier because once in a month we have a webinar for FX Street. So since we covered, all the questions we had at the moment, we'll wrap it up earlier and we'll be back as always tomorrow. Thank you.
Thank you, Steve. Thank you, everybody.
Bye-bye.